The market is a battlefield of expectations versus reality, and this week's headlines provide a stark reminder. First up, DoorDash stock saw its steepest drop ever amid spending worries. The anxiety struck after DoorDash announced plans to spend several $100 million more on new initiatives and platform development in 2026 compared to last year. This matters because investors are grappling with how this significant increase in spending will impact future profitability, even as some analysts view it as a necessary long-term investment for growth. The outlook suggests potential short-term volatility as the market digests these capital outlays. Investors will be watching closely for concrete details on these new initiatives and their expected return on investment to justify the expenditure. Moving on to our second story, a company embracing the AI narrative. Opendoor's AI bet, a path to profitability. Opendoor Technologies, the online real estate platform, is making waves as its new CEO declares it an AI company and vows to achieve profitability by the end of next year. This strategic pivot is significant as the AI buzzword continues to heavily influence market sentiment. For Opendoor, leveraging artificial intelligence could streamline its complex real estate operations, but the ambitious profitability vow sets high expectations. The outlook for Opendoor hinges entirely on its ability to deliver tangible results from its AI integration and meet its profitability target. Investors will need to see concrete evidence of efficiency gains and a clear path to sustainable earnings. Finally, let's turn our attention to Block, where strong results still faced scrutiny. Block beats expectations but nitpicks. Way down stock. Block, formerly Square, reported results that surpassed analyst expectations. However, a closer look revealed that gross profit growth at Square lagged behind the growth in payment volume, and the overall earnings beat was materially smaller than its gross profit beat. This matters because even strong headline numbers can be overshadowed by underlying metrics. The discrepancy between gross profit and payment volume growth suggests potential margin compression or a shift in business mix, which are critical concerns for a payment processing company. The short-term outlook indicates that Block's stock performance could remain constrained until these nitpicks are effectively addressed. Future reports will need to show improved gross profit margins relative to payment volume and more robust earnings growth to reassure investors. This week's financial news highlights a market grappling with growth strategies, technological pivots, and nuanced financial reporting. From DoorDash's significant investment in future initiatives to Opendoor's bold AI-driven profitability promise and Block's strong yet scrutinized results, investors are reminded to look beyond the headlines. The key takeaway is the importance of understanding the underlying drivers of growth and profitability. As we move forward, investors should closely monitor execution on these strategic plans, the tangible impact of AI integration, and the granular details of financial performance, particularly gross profit margins and earnings quality. Drop your thoughts in the comments. And if you enjoyed the video, give it a thumbs up. Don't forget to subscribe and hit the bell icon. Thanks for watching. See you next time. This is not financial advice.